future. We're talking real money.
You know, there was once a play, a musical, movie, with a song about money. And it very aptly stated that it is money that makes the world go around. Money makes the world function. We don't
need Joel Gray on that number. I love the way he did it.
Barter. We do not barter much. I mean, you know, if you live in a farm, you might barter a little, but we use money for everything. And yet we do not devote the time or the effort needed to truly understand it. We just take what we believe are experts' word for it, and we follow their advice sometimes blindly into a giant crevasse or crevice or a cave or big hole in the ground or
cave.
Whatever.
I prefer cave. I like cave.
Pit.
I'm good with cave.
Into a pit.
Okay. Yeah.
Into a pit. And we read all that stuff. We try to read a lot of that stuff so that we can call them out on it.
Yeah.
But one of the things
There's a lot there.
Yeah, lately, there have been a lot of Scrooges, and all of you may be among them. When you are saying bonds, humbug. I don't need no stinking bonds in my portfolio. What are they good for? Just give me stocks. And then, of course, you get experts coming out and saying,
wait, experts?
Okay, people who think they know a lot coming out and telling you, you're right. We call that pandering, but they're telling you should be just in stocks.
The paper is entitled Beyond the Status Quo, a critical assessment of life cycle investment advice. Two professors, one from the University of Arizona, one from the University of Missouri.
Who's the Arizona one?
Scott Sederberg.
Oh, it's not Bessenbinder.
No, I'd be listening. I'd be paying closer attention.
The Bessenbinder.
Professor Bessenbinder. Yeah, because I like his work. But what these professors have come up with, frankly, is, I think, on a practical level, outrageous. On a theoretical level, okay, yeah, in the classroom, sure, interesting fodder, maybe a couple papers, maybe a doctoral thesis could come out of all this. But I do not like this.
Sam, I am.
Their point is, running simulations over a long period of time. If you just put it all in stocks in their measure, you end up with $1 million. If you have a balance between stocks and bonds, the traditional 60% in stocks, 40% in bonds for your retirement, you have $760,000. That sounds like $250,000 less.
It is.
Which, okay, that's a big deal for most of our retirements. No, you don't think $250,000?
Well, no, it's a big
difference?
deal, but let's talk about the reality of getting there.
Yeah, well, I would get it. I just dislike this paper because they do quote one advisor who says, in theory, it works great. In reality, not so much, because I have seen the reality up close and personal for a long time. Don knows how excited I got when I read this.
Oh,
and not in a good way.
Oh my gosh.
Not in a good way.
No, he wasn't good excited. He was angry excited.
I was very angry because I worry people read this and think, then I'll just go do that. But then they forget about, and we all do. Oh, we forget about 2000. We forget about 2008. We forget about 2019,
Sir,
2020.
You just said it was a big
2022.
deal. You basically implied that you're better off going for the $1 million with the stocks.
No,
you said it was a big deal.
No, I think $250,000 is a big deal. But just assume, for example, you're 35 years old and you've saved $300,000 in your 401k. Okay? Mm-hmm. You're off to a good start. That's terrific. And then the market goes into a bear. Bear takes over, et cetera, et cetera. Your $300,000 in a few months is $150,000. Don't use percentages, use real dollar amounts, because that's what the real world is about. So now you have 150 instead of 300. What are you going to do? A, nothing. B, sell. C, buy more stocks. I'm betting it's B, because most of the time, and we have seen this, we've seen the behavior. People will say, you know what, it didn't work. I just want to put my money in something else.
We taught, Tom and I have taught so many classes, And back when I started, I said, we need to change this from a loss of 50% to a loss of $500,000. And see how people react. And it was funny, when we made it $1 million and you lost $500,000, nobody raised their hand saying they would be comfortable with that portfolio. 855-935-TALK. Call now.
Tom and Don are talking real money.
In medicine, a second opinion might save your life. With investing, a second opinion might save your future. The trick is getting one without a high-pressure sales pitch. Well, I'm Don McDonald, and if you've been listening to Talking Real Money, you know that our goal is to help everyone create a brighter future by investing and managing money better. That's why, in addition to helping everyone on our show and podcast, we are also committed to making our 100% fiduciary advisors at Appella available to help everyone make the best financial decisions based on science. So if you're being pitched a financial product or a system, make sure you get a second opinion with no cost, no obligation, and no annoying sales pitch by going to TalkingRealMoney.com or call 800-386-3004. That's 800-386-3004 or TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
That sounds really cold and miserable in Seattle.
It really
It does sound
horrible.
really cold and miserable.
Thankfully, I've been hurt for the last month, so I haven't been outside reffing any games. But man,
So I'm not going to tell you what the temperature is here.
No, please do not. Do not.
It doesn't start with an 8 or anything.
I mean it.
It doesn't start with an 8.
Don't. Thank you.
Yeah, and sun breaks. We don't even know what those are. We just have sun.
Actually, we don't either.
Yeah. We're talking a little bit. Oh, by the way, our phone number 855-935-TALK. Lines are open, all of them. We were busy last hour. Now we're not.
Them, yeah.
So
I
call.
don't see any lights there. Yeah.
I see no lights. Lights. Like phones don't. Do people still have the little beep, beep, beep,
Yeah,
beep?
I love
they
those
don't.
things. Yeah.
Nobody has that anymore.
I have to drive my own car too. So
My car drives itself on the highway.
I know.
I love that.
Way ahead of
I have to keep a hand on the steering wheel, but it's just like you just have to touch it. It's just it's fine.
I don't want to know.
It's so fun.
I don't want to know.
Cars slow down in front of you. Like in stop and go traffic, it's the best because you don't have to do anything. You have to watch a little. I'm not like watching movies. I'm still looking out the window.
Please.
Oh, we're talking about whether you should invest all in stocks or whether you should have a balanced portfolio. And Tom was reading from a paper that basically stated, why bother with bonds when the stock market has delivered superior returns? Well, we've been saying the same kind of thing for a long time. Stocks deliver superior returns.
Have delivered.
Have delivered superior returns. That's not the issue. We know they have, but we also know they have done things like 2008.
2020.
Well, you didn't lose as much in 20 as you did in 08.
No, but in a very short period of time, you lost about a third of the money you had in stocks.
Yeah, people were
very short
freaking
period
out.
of time. Oh, they were.
But still, we get papers like this, or we get popular advice from the most popular money show on the radio, with that Ramsey guy on there, who he says just keep your money in a stock mutual fund, and you would have made 12% per year, and he just projects that off into the future.
Sure.
Oh, you're going to make 12% per year on your stocks. So
I think that's a very good point to stop right there. When we talk about it, and I heard you on the podcast, I believe, on a Friday recently, we like to say, try for 6 or 7%. I think that's more realistic.
And we don't know that that's going to happen. We're just saying that's a more reasonable assumption than the double-digit numbers we hear bandied about and the big numbers, because you have proven over and over again there are innumerable studies that have been done on individual investors. And while they say one thing, you say one thing, you do a totally different thing.
Yeah, because we all have weird ideas about money. Number two, I personally believe in today's world, It's hard. It's easier and harder. It's easier to be an investor because there's more information than there's ever been. It's harder because everybody is yelling at you.
Oh, yeah.
Everybody's yelling at you. The
Including
internet's
me. I'm
yelling
sorry.
at you.
I just yelled.
The radio's yelling at you. The podcasts are yelling at you. The television, everybody is bombarding you with messages. And here's what their message is. Yeah, the market just went down 30%. And here's what's going to happen next.
That's the problem.
What's going to happen.
That's the problem, is that anybody who tells you what is going to happen next is a liar.
We've had this discussion, you and I, when we started our firm, because remember, people would walk in the door and they would expect the stockbroker meeting where the stockbroker sits down and says, yeah, 2023 saw this, and in 2024, it's going to be all about blank. They didn't know that. They don't know that.
But the fact of the matter is, if you walk into a Morgan Stanley office, if you walk into a J.P. Morgan, if you walk into an Ameriprise or a Voya or Fidelity, you're going to get somebody who's going to say, oh, here are the investments you should own today because we believe the future will be blank.
Yeah, they know they're predictive in some way, so this is where you need to have your portfolio. That is horrible advice, and it leads to what we're talking about. People feel pressure to do something. That's number one. They feel pressure in many cases to follow what they believe is a professional, somebody that should know what the future is going to look like. And sadly, there is no professional that knows anything more about the future than you do. Really, that's the truth.
And I was just looking at the list of calls that aren't there, and it occurred to me.
That's sad.
No. It actually isn't sad. Because when you think about it, what we keep saying is discouraging to most financial callers. Most people who would call a talk, I know because I've hosted one.
We have our Bitcoin guy. He calls from time to time.
Yeah, but you know, back in the day when I was doing the national show, every call, Tom, was what is the new thing to buy? What is the market going to do? What thing should I put in today? I have this. What's it going to do in the future? Every call was that. Every call was for me to make a prediction about the future. As a matter of fact, this is fascinating.
How did your predictions turn out, by the way? I got to go back and look.
Some good, some terrible, you know? I mean, some were great. Basically, they turned out like you'd expect, like flipping a coin.
All over the place, yeah.
But it's funny. Do you know the show on which, if we did this, our screens would light up? The shows that got me the most listeners. Remember, I used to do overnight radio.
Yeah.
So I was on.
I've been there. I was on the show.
1 a.m.
one night.
East Coast.
Yeah.
So late night, I would occasionally get a guest because I wanted to light the lines up, and we called it that. We're going to light up the lines because they had little lights.
Yeah.
The number one way to light up the lines was what kind of a guest?
Conspiracy theory.
Financial psychic.
Oh, financial. Okay. How's my future look?
I brought a woman on who claimed to be an investment psychic.
Can we get her today?
And I bring her on like once a month. She's probably in her 90s now or something.
Okay. Well, how's her future looking?
Not great. It's short. It's really short. But that was the call that got the most. That was the show that got the most calls.
Yeah.
What does that tell you about people?
That's what people are interested in. Who knows what the future? I want to be told my future is so I don't have to think about it anymore. I don't have to worry about it.
We are officially, as of today, changing the format of the program.
Oh, okay.
Yeah. Wait, I got to find it. I was going to bring this out later, but let me bring it out right now because it's really heavy. I brought
look at that.
Crystal ball. It's really heavy. It's made of crystal, and it's a ball.
Can you look in there and see what it says?
And this one is actually hooked up to Robinhood. It's got a connection,
or the
so that we
company?
can make trades directly from the predictions.
Oh.
Yeah,
I like what you said about it to the person who called in on the podcast too.
So anyway, you're ruining it. This is supposed to be We're going to just call us right now. Call right now. We are going to predict your financial future by laying our hands on the crystal ball, rubbing it briskly, and waiting for the spirits within to impart their financial
All right,
wisdom to
What's
us.
the number? What's the number?
Oh, it's
I'm
a special
gonna call
number.
Oh,
855
yes.
935 Talk.
Call now. Find out your financial future.
What your financial future is.
Oh, I love that. I'm going to call first. I want to know mine.
Does that take pandering to a whole new level?
I think it pretty much does.
Yeah.
I think you're right there, man.
855-935-TALK. Give us a call. I'm Don. Tom's over there, and we just love doing this thing. Talking real money thing.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
The Amazing Kreskin
What?
dropping by. The Amazing Kreskin
Yes.
dropping by. The Financial Kreskin.
Do give us a call. 855-935-TALK. 855-935-8255. And we have Carl on the
I
line
was going to go to
from warm and wonderful Tempe, Arizona.
Oh.
The home of Hendrik Bessenbinder.
Right.
No, that's Bessenbinder's University of Arizona.
Oh, that's right. Not Arizona State.
That's a mouthful. Oh,
Well.
I thought he was ASU. Oh, regardless. Hey.
Anyway, I could be wrong. I believe
Yeah, I think he's
I wasn't-
ASU, Tom.
Okay,
Yeah.
I stand corrected.
All right. Anyway, what's up, Carl?
I'm a son. Hey, I just wanted to see what the crystal ball says about 10% in gold.
Standing by, reaching over, looking into the crystal ball.
It's getting really warm. It's getting, let me flip it over. Let me flip it over. The spirits say no.
But let's tell you why it says no.
Okay, lay it on me.
It
Well,
only
that's
says
fine.
no in it.
Okay, I get
Don's a no kind of guy. There's no yes in his crystal ball. That's it. It's always
No.
Mr. Scrooge. Yeah. Okay, gold. Didn't we just talk about gold last? Oh, I guess we talked about it on our podcast. It's coming up soon. Gold,
I'm
Bitcoin,
thinking
other
about buying a
speculative
suit,
things.
though, guys.
Oh, I see. You're going to run out and buy a new suit. Absolutely. Take it right out there. Give them, I guess, 1 ounce, right? Because it's a $2,000 suit. That works pretty well.
That's cheap for Tom suits.
That's a little rich.
Yeah, right.
Anyway,
no go on the pet rock.
No go on the no. I don't care
We
what
got some
color the pet rock
NFTs we can
is.
sell you, though. We can do that.
I mean, bear in mind,
Beanie
gold is you nailed it. Gold is a rock. Gold is a heavy,
Right.
cool, malleable rock that
Around
for
my finger.
some reason people have assigned great value to. But that's only because we all agree on it. Well, how does that make gold any different than a dollar bill? A dollar bill has value because we all agree it has value. Gold has value only because we all agree it does. Inherently, it's not any more valuable than any other rock, except for the fact that we say it is. It's a rock.
It doesn't
And so
have
that's
any
even-
dividends.
I mean, and so it doesn't make sense even then with all the governments buying more, all the central banks doing their stocking up.
Okay. Let's
none of
do
it
this.
makes
Do this
sense.
with me,
None
Carl.
of that makes sense in that way.
Let's do an exercise together. Let's do an exercise. The exercise is all the banks, they're printing all this currency. The economy is eventually going to collapse. The U.S. economy collapses. What do you think that'll do to the economies of Europe and Asia? It's probably going to cause them to collapse because they need us buying stuff from them. So now we have a worldwide financial collapse, complete chaos. I am now living in my house, but there are no utilities. I can't pay for anything. And I have a whole bunch of gold down in the basement. And there's a neighbor down the street who's growing vegetables. Are they going to take my gold for that? Probably not. What are they going to do with it? Yeah,
Right.
What's it
Exactly.
good for? Nothing.
I would just go take the vegetables.
Now,
from
if
your
I
neighbor.
had a gun,
yeah, exactly. I'd rather have gun,
I got your
canned food,
vegetables,
and, ammo.
we have
Yeah.
chaos. We have utter chaos. So you better hope that all the currencies do okay, because if they don't, the result will not be an economy that's going to be fun for the survivalists and the gold bugs. It's going to be terrible for all of us.
Yeah, if it gets to that point, right?
Yep.
Yeah, exactly. You'll be in your basement in Central Florida.
Yeah, my basement. Yeah.
Start digging now.
Yeah.
And get the scuba outfit on.
In Florida, they call those graveyards. Those basements.
Yeah, exactly.
That's the only place where people are underground is in a graveyard.
Yeah.
There's a lot of sinkholes there, so that's maybe you have a little room to play with. All right, thanks, fellas.
All right, Carl. Thanks so much for the call. Do not buy gold. Do not buy gold.
Purely speculative. It's like those other things. It's only worth what the next person says it's worth. That's it. Period. Nothing else.
Yeah, and
really,
why? The question I have for those who buy gold is, why do you believe that you're going to win with gold? Why? Why do you believe that? Because it makes no sense.
None whatsoever.
855-935-TALK is our phone number. Give us a call, 855-935-8255. I mean, this is some of the best stuff you're going to get on managing money.
Tom and Don are talking real money. Reality radio for a really great future. We're talking real money.
So apparently all we have to do is promise to tell the future, and everything works out. Calls come out of the woodwork. 855-935-TALK is our phone number. 855-935-TALK. And Clay, you're on. Welcome to the show.
Hey, Clay, what's up?
Hey, not a lot. I just wanted to preface my comments and questions by I'm an optimist. I want all of my fellow Americans to do well in their life. If you don't mind looking into
but
your
it sounds like
ball,
there's a but.
All of the talking heads that I've been listening to, the financial talking heads, are saying that the U.S. is heading for this cliff that we're going to drive off. And it sounds kind of scary with commercial loan resets and bubbles there and bubbles in the housing market and $33 trillion. So it just seems kind of scary out there right now. I don't know if that's the case, but I'm an optimist. And one other thing, before you answer that question or look into the crystal ball, for Carl down in Arizona, my mother gave me some fantastic advice 10 years ago. And she said, son, if things ever get really bad, you want to have alcohol to barter with. So forget the gold.
Now, that's a smart mom. I'll tell you what.
Yeah, I thought so, good. Too. I never forgot that. So I stock up on gallons of Crown Royal. I have it ready.
What's your address? Yeah. Just so we know the holidays are approaching rapidly here.
I am honestly thinking about firing up the still now. I'm okay.
Absolutely. Let's invest in grain and other things. Yeah.
Let's talk about the end of the world as we know it. Actually, there's a chapter in my book, Financial Physics, called "The End of the World as We Know It." It talks about. I even came up with an acronym for it. It was like Itawaki or something.
But let's assume that they're right. Then what do you do? That's the question to me.
I have no idea.
Right. I mean, what do you do then?
I like the diversification and everything, but I'm into real property myself.
Okay. Yeah.
I don't know if the people in the know are really talking to the American public.
I'm going to stop you there. I'm going to stop you. There are no. When it comes to this, there are no people in the know. They don't know anything more about what the market's going to do Monday than you do, Clay. That's the reality. I mean, they study it more. They read it.
What about there is things there's indicators, actual tangible data on the commercial real estate bursting, and now the
and wait,
housing,
okay, just stopping you there just for a moment. Just to stopping you on the commercial real estate. Clay, just to stop you from it on the commercial real estate. You're right. It looks bad. I just had lunch with a guy that was big player in commercial real estate here in Seattle. We're talking about et cetera, et cetera. Looks bad. That is likely already priced into the securities.
No, sir, not likely. It is already priced into the securities.
People are trading that every day. There's nobody that knows that nobody else knows. That's the problem. These things are already public, and there's nobody, all the talking, there's just one of the pieces we just talked about. In the piece, it admits the talking head said 2023 would look like this. They were wrong. That was just 11 months ago. They were completely wrong about what the year was going to look like with stocks, bonds, etc. That's the problem. That's what I'm getting at. You can sit around and listen to 1,000 opinions, but they're not going to help you do anything starting Monday because they don't know anything more. That's what I'm trying to get to.
Clay, everything that you know and they know, everybody else knows. The only thing that moves the market in a surprising direction in the future is a surprise. Something that nobody saw coming. Like COVID. Nobody saw it coming. It killed the market, but it only killed it for a couple of months. A month.
Well, will there be a reckoning with all the money printing and things like that I've heard of? So there's could be lead to hyperinflation. And just getting back to the commercial real estate end, there's collateral damage that will happen when these big buildings go under and go blighted regions.
I'm gonna read you a quote. I'm gonna read you a quote from somebody that's been a pretty successful investor. His name is Warren Buffett. Warren said in 2012, he said, of course, the immediate future is unknown. America has faced the unknowns since 1776. Periodic setbacks will occur, yes, but investors and managers are in a game that is heavily stacked in their favor. That's the bottom line, and he knows.
Yeah, and we have to remember the market is incredibly efficient. Everything that you know, I know, they know is already known by everybody. It's already built into the price, like that commercial real estate. It's built into the price.
Tom and Don are talking real money.
Do you suffer from hodgepodgeitis? I'm Don McDonald, and hodgepodgeitis is a disease of your investment portfolio whose symptoms include lots of stocks, loads of random loaded mutual funds, and maybe an annuity or two. Most who suffer from hodgepodgeitis dread opening their quarterly portfolio statements. They feel lost and confused. Investing seems overwhelming and the financial future uncertain. If you believe you suffer from hodgepodgeitis, see a 100% fiduciary investment advisor immediately. A proper diagnosis is the first step to creating a portfolio with a purpose based on a personal plan. Start on the road to recovery now by scheduling a free meeting with an Appella advisor at TalkingRealMoney.com. There is no cost, obligation, or high-pressure sales pitch. Take the first step at TalkingRealMoney.com or call 800-386-3004. Hodgepodgeitis is not a real disease, but treating it has been shown to improve mood, reduce fear, and even lead to a brighter financial future. Results may vary.
Your guides to a really great financial future. Tom and Don are talking real money.
Got to push my button.
Yeah, don't forget the buttons. Yeah,
I forgot to push the mic button. I was talking, but nothing was coming over the radio. Hey, everybody, Don McDonald here in Florida. Tom Cock over there in Seattle.
Bellevue,
please.
please.
I said Florida. I mean, come on.
That's true. That's fairly
Tom's
generic.
over there in Washington.
Okay. Washington State.
Pacific Northwest.
Because if you say Washington, everybody assumes it's Washington, D.C., right?
Yeah. Well, why did they do that? I mean, really, why did they name the state Washington?
Silly. And you know when we became a state? Long time after we became a country. 1889.
Yeah, it was. Yeah.
So anyway, I don't know. Could have come up with something a little more original. So, how about Columbia? I always like that, but I guess not. Vancouver.
Columbia's actually, that would be a good name for the state. Anyway, we're not changing the state today. We're going to change your life, though, in some small ways by helping you deal with money better. And if you have
Atomic Habits. Yeah.
What? Atomic Habits. Got it.
I love that book. Love that book.
You love so many books.
I do. I love reading. I'll be honest with you there.
I love reading, too.
You do?
Just don't have any time anymore.
It seems harder, doesn't it?
Oh, my gosh. I listen to them in the car. It's like I look forward to going to lunch by myself.
You get that break.
By myself.
And you can do that. Right. Because if you have somebody else in there,
I can't
might
listen
not
to
like
the book.
That. Nah, wouldn't like that.
If it's my
she
wife,
might
no,
talk
I
over
can't
the
listen
book.
to the book.
Yeah.
No, she doesn't want to listen to my books. Anyway, 855-935-TALK is our phone number. Give us a call. It's so easy, and we really are pretty nice.
Kinda. It's the holidays.
I'm nicer.
Trying to be a little softer.
I got to tell you, I'm a little nicer to callers than Tom is. He gets very short with you, but
testy.
You know, he can't hurt you because it's radio or it's podcast.
If it was in person anyway.
Yeah, even in person, he couldn't hurt you. So give us a call, 855-935-TALK. Jeff, you're up. Welcome to Talking Real Money.
Thanks, all. Appreciate you taking my call. We went to, a couple of weeks ago in Federal Way, Washington. We went to this event. They sponsor lunch or dinner. I'm sorry, and give us a bunch of. I know, but
good
I've been
steak.
to
I hope
a couple of them, but yeah, it was all right. Italian, it was good. But they offer, and I didn't make an appointment yet because I want to get your take on it, but fixed index annuities, but it's benefits of FIAs with annual reset of 7 years.
Yeah.
And I know you talked many times that don't do annuities at all, but it was interesting take, but I haven't done anything, of course. Yet.
Yeah, interesting take, interesting presentation. Absolutely
times,
filled with lies,
ways,
filled with little lies.
Yeah, that's the
They're
smart
little
part.
fibs. I bet they showed you a chart of the S&P 500, right?
Of course they did.
Yeah.
And they're giving us a bonus of 7%, 10% lump sum, 40% income.
But let me tell you a little thing about that chart they showed you, the S&P 500. They neglected to include the dividends of the stocks in that chart.
Yeah, what they pay out every year to the people that hold the shares, like 2%
which
or so.
kind of bails people out of those bad, helps to bail them out of the bad markets. I bet they also did not mention that this variable or this indexed annuity comes with a 10 to 12 year surrender charge starting at somewhere around 10% if you want to get your money. Probably didn't mention that.
It says time is 10 years. It says fees. There's a charge and it's got to be hidden. 10% free withdrawal yearly after 12 months. 10% free withdrawal yearly. But that's about all.
And then let me tell you the reality of the indexed annuities. This is a product that is so complex and convoluted that I have truly yet to meet a person selling them that I've talked with who can accurately describe what they do and how they do it, because they use obscure indexes on which to base their movement in price. Then on top of that, there are participation rates. You only get a percentage of the movement of the obscure index up to a certain percentage, which ends up being, in almost every case I've ever looked at, and Tom, how many of these index annuities have we looked at?
A lot.
In every case, the return ends up being about the same as what you'd get on a regular old fixed annuity without all the bells and whistles. Today, that will probably be in the range of 4 or 5% per year.
Yeah, and I look at this differently, Jeff, than Don does, because I'm more of the practitioner. My question to people always is, why? Why do you need this product? Why is this important to you? Because most people would never know about this unless they went to the aforementioned dinner or they heard an ad and thought, oh, that sounds really good because it uses that G word that I can't use.
Guarantee?
Yeah,
we can't.
Oh, guarantee.
As a matter of
yeah,
fact, if we say the word guarantee,
we get in trouble.
We get in trouble.
Even if we're talking about somebody else. So, I mean, I always think, well, then why are you interested in it? Where does this fit? What part of your life do you need an annuity in? And many of the people that say, well, I have Social Security, I have this pension, and I say, those are two annuities right there that are fairly well guaranteed depending on the insurer. Right. One's the U.S. government, looks pretty good.
But the reason people buy
not.
index annuities, Tom, though, is not because for that annuitization part. They buy them because they hear the return of the market with no risk. Let me tell you one thing I can pretty much assure you of. You will not get the total return of the market in any indexed annuity. It is impossible. It is mathematically impossible for an insurance company to pay you exactly what the market makes, pay their insurance agent a 10% commission, and post profits. It can't be done. If it could be done, this is where you need to look at it logically. If it could actually be done, why would anyone invest in the stock market?
Wouldn't be no reason to take the volatility. I mean, the other thing about these products is they are not sold by 100% fee-only fiduciaries that have a
They're
federal
not sold by
requirement.
fiduciaries at all.
Yeah, that have a requirement to put your interests ahead of their own. Again, if I was just shopping for, go ahead.
They're IRMAA certified planners, so yeah, they're not.
I don't know.
Wait a minute. What was? No, give me that. Give me that.
IRMAA. He said.
IRMAA.
Yeah,
Right.
We're not picking on you. I mean, again,
Yep.
but these products are sold by people in the insurance industry. Here's just to pull back again. If it was me and I was shopping for somebody or shopping for a product, the starting point would be, what rate of return do I need on my money to have it sustain me and my significant other for a long period of time? What is that rate? Then I'd go back and figure out what products I would need to make that happen. For us, it would not include any annuity product, save for possibly, and we don't use them, as Don mentioned, an immediate annuity, where you give an insurer a certain amount of money. They give you some part of it back for a long period of time with a small amount of interest. Kind of sets the budget, provides that regular return. That's the only annuity product that I would get near, and I wouldn't touch any of these because, as Don also said, the promise is an outrageous one that is sold and where the insurance company makes a lot of money and the people that hold them make a lot less. That's our experience with them.
And
it has two things.
Go ahead.
Okay.
No, go ahead, please.
It says Irma is 20 years old. Which financial firm, fiduciary, tax advisor, or benefit plan manager has ever mentioned it to you? And then the Executive Benefits Group, it says insurance products offered through Executive Benefits Group, LLC.
Right. It means they're an insurance agent.
Yeah.
And let me tell you what about Irma certification. It's basically just a made up certification. It says you know about Medicare. And I'm looking at their website, and there are frequently asked questions, and one of them is, how do I register? And they forgot to fill in the blank on their website. It says this is a custom heading element. These people are not competent.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
I swear it feels like companies are just inventing these designations. That they're popping up all over the place. And this one strikes me as half-baked looking at their website. It's really a bad website. And they on their frequently asked questions, they say, is Irma recognized by FINRA? And it says, yes, you can see them listed on FINRA. So you go to the FINRA page, and at the very top of the page, it says, important disclaimer, FINRA does not approve or endorse any professional credential or designation, but the implication is that FINRA does, which leads me to believe they're not the most honorable bunch of folks.
Yeah, and I mean, Irma's a real deal, right? Because when it comes to your Medicare, it can be an impact your income. So that's something to know about. And by the way, I will put in just a little plug here for an event that we've got coming up. It's a few months away, but you sign up now and you get not just early bird ticket pricing, but you get the Talking Real Money mug you get to use that day. So what is he talking about? A one-day event where the dog barks, yes, where you learn about all things retirement, including Irma and housing and the money part and the purpose part. We do it. This is our 10th year of Retire Meet. Very successful event. Great names on it, guys you've heard of, you've probably listened to. Oh, I think there's a guy named Paul Merriman there, Herb Weisbaum, Don McDonald might even show up. It's a wonderful event.
Maybe it's a long flight.
It's a long flight. It's Saturday, February 24th, 2024, 10th anniversary. Sign up by going to retiremeet.com. As I said, early bird tickets right now. Plus, for those who sign up right now, right this month, you get the mugs, the Talking Real Money mug that you'll get to use that day. It's a great event, and it'll help people like you, Jeff, kind of figure out the playing field rather than going and hearing about a product that sounds so great. Why wouldn't I do this? You have enough education to say, here's why I don't think that makes sense.
Yeah.
Retiremeet.com.
Yeah, and
how about that?
And the mug's cool. It says it's the Stay Calm and Retire Strong.
Indeed it is.
Thing.
That's right.
So, and you've got to know, and I want to go back to Jeff's call really quickly. You've got to know when you are getting fed a dinner, like at Ruth's Chris or some fancy Italian
place. He said, yeah.
Yeah, or some fancy Italian place. You've got to know that if they are paying money for a dinner, that they are making a lot of money off of you. And please know, they're not going to tell you this. As a matter of fact, I've gone to these.
Yeah, Don went
and
surreptitiously,
I've gone
right?
to several, and I always raise my hand and go, what's the commission?
They never will tell you.
Every single time they tell me, this is the biggest lie, there is no commission. The company pays us.
Oh, the company pays us, yeah.
The company does. Companies always pay the commission. Bear that in mind. Companies always pay the commission, but it does come out of your money. It's the only place there is for it to come from.
It's called the surrender fee. I think you mentioned that earlier to Jeff.
So,
the long period of time.
If you want a free steak dinner, please feel free to take advantage of them, but never, ever, ever, ever take the meeting. Don't take the meeting. It's just trouble. It really is. It's just going to get you in trouble because the pressure is extraordinary. They are great salespeople. And so go to retiremeet.com. Get a better education. And it's really easy. Retiremeet.com.
The opinions and views expressed on this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions. Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy. Information presented on the podcast is not personalized investment advice from Apella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Apella Wealth, a fee-only registered investment advisor. Please see Apella Wealth's ADV Part 2A on our website for information regarding Apella's fees and services. Apella Capital, LLC, DBA Apella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Apella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. And the lawyers get richer.